And now for the extra bonus, I want to share with you a candlestick pattern, or just to equip you, just to give you a bit more tools in your toolbox to make that decision. And candlestick is a pretty much advanced, but I'll give you the quick, easy 5 candlestick patterns that you need to remember, to memorize, to make sure you get it printed on your wall. This will help you in general very much on a daily basis when you're watching your charts. So the first one is bearish engulfing. Bearish engulfing is one of the most common one watch, and it's pretty much, I would say, 7.5 out of 10 accuracy for traders, day traders, swing traders. So bearish engulfing, you can use the 4-hour or the 1-day chart. There is where you can see if your stock goes up on a straight line and all your candle pattern sticks all green, but one day on a very wrong day that you notice that on the closing day, the candle is actually bigger, the red candle is actually way longer than your last previous 2-3 days, and that shows you bearish engulfing. And that's when it goes, people are taking profits, and a lot of volume being coming in, and that's when the sell-off comes about. And the second one that I like is the 3 crows. This is the one that stamps in definite 100% that it's a bear. It's time to sell, it's time to bail, everybody's going. 3 white crows is generally happening over 3 trading days for me. So 3 trading is 3 long white sticks that you can see is on the chart here. It's 3 very obvious white stick that goes 3 days of sell-off, and the only way is down the way. And that's the most of the time that if you could pick it on the first or second crow to sell off even before the third one appears, great. But if the third one appears, it's most likely late and you still have time to sell off before it gets even worse. And the next one, accuracy wise, not too much, but something that to watch out for. It's called the evening star. So if you've got a stock that goes up all the way too high, and suddenly on that trading day, it goes nowhere. The trading stock price goes all the way up, all the way down, but settle right in between, and you can see that evening star. And perhaps it's the time that everybody's taking a rest, all the buyers are taking a rest, and everyone's trying to look around to see maybe it's time to take profits. And the next day, most likely it could go down the way, or perhaps it might go up the way. Most of the time when you see an evening star, you just take a hold and make a conscious decision whether it's time to take some profits off the table. And finally, the fourth one is, okay, so your stocks go all the way up, and then you suddenly see a very substantial candle, and with long wick below it that looks like a candle. When you see the long wick, it means that people are trying to call to sell for a lower price. People are trying to buy for a lower price. People don't think it's that price. So that's what causes the wick that's really long, and potentially it could invert down the way. And last one, the fifth one, is the head and shoulder pattern. That head and shoulder pattern comes once in a very blue moon. So head and shoulder pattern is when you see a hump, first hump, which is the first shoulder, and the head, and then it falls again, and then it causes another bull trend, and you can see the neckline that's persistent. And every trader, every investor that sees a head and shoulder pattern on this mega big cap stocks or popular stocks, and it just shows that there's so much resistance that couldn't reach the second or third head or the shoulder, and that is time for the sell-off. And generally this sell-off could last 1, 2, 3 or 4 months. It just could go down the way. So be careful when you see head and shoulders. It just indicates where a stock is going to a point where the bulls are trying to push through, but the bears are pulling really resistively strong. And there's no reason for it to go beyond the head of its last all-time high. And that's the head and shoulder. And if you see that, it's as bad as death cross. And if you see a combination of two, just run for the wide open cover. So this is me on the 5 key patterns that you need to know as an investor.
Alright, before I say goodbye, please do like and subscribe on my YouTube channel, follow me on Facebook, and if you want, support me on Patreon as well, so I can produce content like this every single day for you guys, to give you guys value. So please do share, share this video to help us grow our YouTube channel, yeah?
Yeah.
Alright guys, 3, 2, 1, bye bye!